Hello dear traders, let us review the major economic events in the past week. US stocks rebounded last week, though US dollar index fell. On Monday it was reported that consumption expenditure in February increased less than expected. Market participants have decided that because of that the Fed may be cautious about rate increases. Federal Reserve Bank of Atlanta suggested that the growth of the US GDP will not exceed 1% in the first quarter of 2016 and will be much less than its 1.4% increase in the fourth quarter of 2015. The result was that US dollar index started falling and declined the whole week as the majority of incoming information supported expectations of market participants that the Federal Reserve will not be rushing to increase interest rates. Stock prices were little changed due to low trading activity on Monday. European stocks exchanges were not working due to the Catholic Easter holiday. Positive US economic confidence index for March was published on Tuesday. However, most investors' attention was focused on the speech of Fed Chairman Janet Yellen, during which she said that the Fed should be cautious about monetary policy changes. After this, the probability of rate hike at the July meeting of the Federal Reserve dropped to 46% on Tuesday compared to 51% on Monday, and the probability of the September rate hike decreased to 56% from 63%. This has contributed to a rally in almost all the markets, and the dollar index steadily moved further down. We also should notice that in mid-December last year the Fed has raised its key interest rate from 0.125% to 0.375% for the first time in 9 years. On Wednesday and Thursday, no particularly important macroeconomic data were published. After the Fed statement, the movement of stock and currency markets was the same as on Tuesday. Stocks rose and the US dollar declined. In the first quarter 2016, the stock index S&P 500 managed to grow by only 0.8%, which was its minimum increase since 2009. Most market participants expect that the total profit of corporations that make up the index declined by 7% in the first quarter of this year. Corporate reporting of earnings in the US is expected on April 11th. On Friday, positive data on the US labor market for March were published. The number of new jobs in non-agricultural sector, non-farm payrolls, exceeded forecasts and reached 215,000. In addition, ISM manufacturing was positive. It rose more than expected to 51.8 points. US stock indexes continued gaining. On this backdrop, the weakening of the dollar halted, and on Monday it even began to strengthen slowly. This week, on Tuesday, the US trade balance for February will be released. On Wednesday, March Fed meeting results will be published. On Friday, we expect the current Fed chief, Janet Yellen, will meet the former leaders of Federal Reserve. It is not known whether a press conference will be held. Furthermore, wholesale inventories for February will be released. The preliminary forecasts are neutral. It should be noted that this week we expect speeches of a number of regional Fed heads, which may also affect the financial markets. This was all for the last week. Happy trading and see you next week.